So Alberto, welcome. How are you, my friend?
Great. Thank you so much. I just came back from my holiday, so I'm feeling great.
Awesome. So I know you're sort of you're not in the U.S. So to the extent you want to talk about either where you went on vacation or where you live, I mean, people might find it interesting because most of the people in the room, live in the U.S. and you're in a different part of the world. So maybe you can tell us something interesting about where you live or where you went to visit that we might not appreciate.
Yeah, absolutely. So I was born in Madrid. I have lived for 6 years in the UK and in the Netherlands, and currently I live in Andorra, which is a small country between Spain and France. And for holidays, I went to Portugal, to the Douro Valley, so where they make all the wine in northern Portugal, and yeah, I
Oh,
mean,
wow.
So
yeah,
Alberto, you know what you have to do? You have to organize a trip. You probably can make some good money off of this. Get everyone from the U.S. to come on over and take us on a tour of the vineyards and the wine. That'd be great. So Alberto, I got to tell you, I was joking with you about the other day when we were on the phone. Dilly, like most people have never heard of Andorra. We actually got somebody in this space who lives in Andorra. So Alberto, is Andorra technically part of Spain or is it its own country?
no, it's its own country. Andorra has existed for almost 1,000 years, and yeah, it's just a really small country between Spain and France. And it's basically in the Pyrenees, so in the mountains between France and Spain, which is like a natural border between France and Spain. And the country is literally located on top of the mountains. So I live almost 2,000 meters above sea level.
Alberto, this is you could have so much fun because we're all Americans. Like we can't find Andorra on a map of Europe, but is Andorra kind of like similar like Luxembourg? Like it's a tax haven type place. Like what's the deal? What I mean, if you've been to Luxembourg, how would you compare and contrast Luxembourg with Andorra?
So Andorra is not in the European Union. Andorra is on itself, and I would say that it's better for Spanish speakers since everyone here speaks Spanish. Um, but other than that, I would say they're both pretty similar. For me, it's a better deal to live in Andorra since it's not part of the European Union,
Right.
and the European Union has problems of its own. Um, but yeah, I mean, and of course, it's close to Spain, it's close to Madrid. It's definitely closer than Luxembourg, and yeah, I mean, that's pretty much it.
So are you? I'm just looking here on the map. I'm sorry, I'm so ignorant. Are you near the Basque country or not?
I'm near the Basque Country. I would say it's tops 3 hours by car.
Right. Okay. And so we were talking about food before. You got pretty good food there, don't you?
Oh yeah, I mean we have a mix of Spanish and French food, which are both renowned for their cuisine. So yeah, we definitely have great food in Andorra
All right.
and
So
great wine.
Alberta, I hope you have room in your house because Dilly and I are coming over to visit. Sounds really good. What do you say, Dilly?
Oh, yeah, I'm on my way. I'm looking up
We're
tickets
Oh
right
yeah,
now.
so,
you're
Alberta,
yeah. Go
sorry.
ahead.
No, you go ahead. Go ahead, Alberta.
Yeah, absolutely. You're most welcome to come and visit.
And by the way, how do we get there? Like, you have to fly like New York to Paris or New York to Madrid and then take another plane. Like, there isn't Andorra Airways or anything, is there? But how do you get to Andorra?
So we have an airport around 30 minutes away by car, and but the closest large airport would be Barcelona. So yeah, you can fly New York to Barcelona and then grab a car, and you'd be here in a bit.
Oh, that's great. That's great. Okay, so let's get on to the issue before the house. So, Alberto, I've really been impressed. The reason you're on here, you don't have a huge following, but I've really been impressed with some of your writings and your Substack. So everyone should give Alberto a follow on Substack. And you've been writing a lot about mining stocks and whatever. So maybe talk a little bit. Start off with I don't know, like, I'm not sure if you just cover mining or you just cover things that are interesting. So what types of stocks do you tend to focus on?
So I'm somewhat of an inflection investor. So I try to look for industries that are, for a lack of better word, decadent in terms of their economics and their cyclicality. I look for any industry, whether it's in the resource space or anywhere else, and I try to buy the companies or the best companies to play that thesis. So I was buying coal stocks and uranium stocks 5 years ago when both industries were decimated. So that's kind of my thing. I will buy any stock in any country just as long as it's cheap, and I find the cheapest stocks in the most bearish markets. So in the markets that are the most hated and the most overlooked.
So you like to look for bargains.
Yeah, and I look for bargains in industries that people hate.
Okay.
Normally.
Okay. Cool. Cool. All right. Okay. So what's sort of on your mind? What's top of mind for you? What are you really excited about? I mean, what are your sort of core beliefs? I mean, it's a market of stocks. Some industries are doing well and some industries aren't, and some stock prices are expensive and some aren't. So in terms of trying to help the individual investor in the room today, like, where do you think they should, like, what interests you and what do you think they should be focusing on?
So I think now there's never been a better time to do the opposite than the crowd is doing. So right now, everyone is going into crypto and going into tech stocks. I would say that not doing that is already a win in the long term. I'm pretty sure that in the short term, I'm certainly wrong. Both of them will probably do pretty interesting. Pretty well, sorry, in the short term and or medium term. But I would say that 5 years from now, there's going to be so much volatility in both sectors that I think everyone would be better off just staying off it. So for me, the most exciting sectors to look at in terms of valuations would be platinum group metals. So that will be mainly palladium and platinum, gold, copper, and anything that any stock that would benefit from uncertainty from bad economic conditions.
Okay. So terrific. So Alberto, just so you know, I put up in the nest, you sent me a few charts.
Yeah,
So you can talk, so let's talk about, maybe talk about a few names you like, or you want to start with a few industries you like. So if you
yeah.
like, maybe we start with PGMs, because I know that's top of mind for you. So just so you know, I put up the 4 charts you sent me. There's so people can see those if you want to talk about them. But let's start off with the PGMs. Why are you interested in PGMs?
So PGMs have been in general in a bear market since 2008. So it's been a 17-year long bear market. Um, and that attracts my attention always because when people have been losing money for 17 years straight, they don't do the best. They don't make the best decisions. They sometimes act out of panic and with a complete lack of rationality. And last year, I did a pretty deep research into the industry, and I analyzed every single company worldwide that is involved in this sector, and I analyzed the different ways to get exposure to the sector, and I came up with a couple of companies and a couple of strategies to try to get exposure to the PGM sector. This year, I did an analysis on every recycler, miner, developer, explorer of PGMs. And I built a supply and demand model, which you can find on my Substack, which is completely free. By the way, anyone can check it out. And it just that research, this research that I have done last year and this year has made me even more bullish on this industry. So the graph that George is talking about would be the average depth of PGM mines worldwide. For those that are not into the mining industry, the deeper you go in terms of mining, the more expensive it gets, the more difficult it gets to find those minerals, and therefore you need a higher price to incentivize production.
Right. So let me just bro, let me just interrupt you. So just for those that can't see the nest or the graph is too small, it looks like in the last 100 years, the depth of the average mine has gone from 200 meters to almost 2,000 meters. I mean, wow, that's a lot.
Yeah, absolutely. I mean, PGM mining is pretty recent. Like, it's not like gold, which has been happening for thousands of years. PGM mining has been happening since the early 1800s, and in the whole 19th century, pretty much the world could mine these metals off the surface. Like, there was just no depth to the mines. Like, it was just the low hanging.
You could just scrape the ground and it would come up. It's sort of like I get it. So but the low hanging fruit's been picked, so they got to go deeper and deeper each time, is what you're saying now.
Yeah, and as those sources became depleted, the world started to dig deeper and deeper. And today, the average depth of a PGM mine is around 1,900 meters below surface, and at those levels, the temperature is almost 40 degrees Celsius. I mean, just because of how close you are to the Earth's core, which you're very, very far. But still, like, it's much hotter than on the surface, and there is no wind, there is no rain, so there's no way to cool the mines down there unless you build these extremely complex AC systems to cool your workers down there.
Wow.
So yeah, I mean, these mines that are primarily in South Africa and Zimbabwe, both of which produce like 50% of the world's PGMs, they have the deepest mines, and they have the most expensive to produce metals in terms of PGMs. So yeah,
okay, so,
I mean,
so they'd have to go deeper and deeper. I got that. So the cost is going up. But maybe I'll talk a little bit about the demand side. I know what was on platinum, whatever. You had the catalytic converters and all that demand went up, and it was over. So talk about the demand side and what's been going on there, because so we can talk about supply and demand. Maybe talk about each of those factors.
Yeah, so in the short and medium term, demand is almost 100% driven by cars, particularly internal combustion engines and hybrids. Hybrids can be conventional hybrids or plug-in hybrids. And those aren't going anywhere, even though our governments tell us that the EVs will replace conventional cars by 2030 or 2050. I mean, anyone who's trying to buy a car will realize that that is nonsense. Conventional cars are here to stay for quite a long while, and actual production of hybrids and internal combustion engines is actually increasing, not decreasing. So that is in the short and medium term. In the longer term, I'm talking 50 to 100 years. So perhaps none of us will actually get to see that. That would be hydrogen and anything fueled by hydrogen, which needs platinum and palladium to work.
Okay, so the so demand Looks okay. Now, remind me, because I know just enough to be dangerous, so I used to be an auto analyst. So was there like oversupply because demand went down, or recycling? I can't quite remember. Like, what was the problem? What was the problem with platinum?
So basically, platinum and palladium both substitute each other. So you need one or the other to make a car nowadays. You don't need both. So when palladium prices go up a lot, um, automakers make a shift, which takes quite a while. It takes months to make. They make a shift towards the cheaper metal, so that will be platinum.
Right.
So there's kind of like they're both inversely correlated to some extent. But as I said, there is quite a lag in time for automakers to make that shift. So this inverse relationship is not perfect. And the oversupply of platinum has also been driven by recycling. So a larger capability of recycling these metals. But due to the lack of incentive in price, that those capabilities are decreasing. Like the potential output of recyclers is decreasing. And the most important thing for oversupply in this sector is the mining industry. So the mining industry, if today you found a PGM deposit, in terms of exploration, so a geologist in the middle of the jungle or whatever, it would take you between 5 and 20 years to permit and build that mine. So there's a massive lag in time in order to build a mine. So mines that are coming online today, which there aren't any, would have needed to be found 5 or 20 years ago. So investors need to understand that the low prices for the last 17 years are taking now effect on actual production. So right now, miners are starting to decrease production, close down mines, and fire the workforce. In some cases, anywhere between 20% to 50% of the workforce has already been fired.
So are we looking at a situation, Alberto, if I understand you correctly, that production may be declining for the next few years? What are you saying?
Yeah, production is already declining. We are seeing massive deficits. So deficits that would be equivalent to around 10 to 30% of annual production. And those deficits are taking a dent on inventories. So inventories of palladium and platinum. At this point, price discovery will be driven by lower supply, not higher demand.
Got it. And so do we have any idea? So I know prices of went up a lot in the last couple months after being dormant for so long. What has caused these prices to take off so much?
I mean, in the short term, there hasn't been any particular event. You could argue that lower production reports from South African miners have driven the investors to pile up on platinum and palladium. There was also a massive short on palladium. So there were 60 times more short contracts than long contracts on the commodities market on palladium. So there was a massive short interest.
Oh my god! Oh my god! Oh my god! Okay, yeah, go on.
Yeah, and that has decreased to some extent. And for those of you that don't know, short sellers, in order to close their positions, they need to actually buy what they are short.
Right.
So that has exacerbated what was previously a negative thing is now a positive.
Right. Wow. Okay, so there's been short covering, but there's still a big short position out there.
There's still a big short position out there. It's hard to quantify, but investors are very much friendly to trend investing. So they try to follow trends, they try to follow correlations. If something went down yesterday, they assume that it's going to go down today. So they're still persistent in shorting palladium, not so much platinum. But that interest has definitely decreased.
Got it. Okay. So where are we with respect to current prices, and you're talking about incentive pricing, and where do prices have to go? And not just go, but I suppose producers need to have some idea that they'll stay up as well. So how high do platinum prices have to go, do you think, in order to elicit a supply response?
So the all-in sustaining cost of PGM miners is anywhere, on average, I'm saying, is anywhere between $1,000 and $1,200 per ounce. So that is where platinum is hovering right now in terms of pricing. But at these prices, most miners are break even, unless you talk about Russian miners. But since most of us cannot even invest in Russian companies, there's no point really talking about them in terms of investing. So right now they're kind of break even. Some of them are losing money, some of them are break even. I would say incentive prices would have to be anywhere between $1,500 and $2,000 per ounce. But the mining industry works in a very pendulum fashion. So they go from very low prices to very high prices. So in the next 5 years, we'll probably see palladium and platinum going north of $3,000 an ounce, just simply because miners have no ability to respond in the short term to higher prices. So if tomorrow palladium platinum prices went up 100%, it would take miners months to increase supply. And to solve the deficit, it would take them years. So in the mining industry, these things are really radical, and prices move in a really radical way.
Wow, that sounds like a pretty sexy story. That's pretty cool. So what is the best way to play this? Through the stocks, through through the ETF on the metal? Like, what would you tell investors to do? And obviously, this is not financial advice. You're a professional. You know what you're doing. So everyone's on their own. But how would you advise people who are listening to this space, if they're interested in your story? Like, what do you think they should look at the stocks? Look at an ETF for the metal? Like, what should they do?
So for the most risk averse investor, the best way to play this thesis is just to buy a palladium and platinum ETF. So Sprott has an ETF, a physical ETF that holds both palladium and platinum. So that would be probably what I'd recommend. I would say that most investors that are familiar with this sector, they will probably talk to you about Sibanye-Stillwater or Impala Platinum or Anglo American. The main problem of these companies is that they're all based in South Africa, and South Africa, for a lack of a better word, is a terrible jurisdiction. I don't think one can invest a significant amount of money there and have a good sleep at night. So what I'm doing is I'm playing this just like I played uranium, which worked really nicely for me. And what I'm doing is I'm buying the best undeveloped projects of PGMs worldwide. And since there are only like 20 developers worldwide, just picking the best is not very hard. I would say there are only 5 companies worth investing in. And those 5 companies in the next 5 years, I would say they have an upside of more than 1,000%.
Wow. Okay, so obviously, Alberto, you're sensitive to this. If you want to mention some of the names, you can, but I think you need to explain to people that these are very small market caps. I think some of these, and they can be somewhat illiquid. So, like what you're doing, and maybe what the real value is. But I think for an individual investor, I mean, it's tremendous volatility. So, is that why you're saying the ETF may be the better choice?
Yeah, absolutely. I mean, if you don't want to experience volatility, if you can stomach it, then absolutely go and buy a physical ETF. Perhaps if you don't want to take any volatility risk, you may want to hold a PGM recycler like Johnson Matthey. JMAT is a stock symbol. But for those of you that are willing to stomach volatility, the best way to play this thesis is just to buy the best palladium and platinum projects worldwide.
Got it. And I don't know if we want to go into the names, but just Alberto, what is the market capitalization of some of these names? Aren't they kind of like, what are they like roughly? I mean, what type of market capitalization
Yeah.
are we talking about for these names?
So my top pick is Bravo Mining. I think Bravo Mining is sitting around $200 million Canadian, and they are some of the they are, I think, the second largest PGM developer worldwide. My second pick is Generation Mining, and that's around 50 million Canadian dollars, 50 million Canadian dollars. So yeah, these are very low market cap companies, very liquid. They're very sensitive to ETFs, taking them out of their list or putting them on. So be ready to see some very volatile move if you do buy the top.
If I could just interrupt you, just as one example, Alberto. I'm just looking here at Bravo Mining at the chart, and so we know. So maybe you could give an insight to people. I'm sure this happens to all of us. You have an idea, and you may pick the right instrument or the wrong instrument to express it. And so, Bravo sounds like it could be a great stock, but could you explain? I'm just looking back the last 5 years. The stock was like $1.80 Canadian. Looking at a chart in 2022, and it more than doubled. It went to like 5.5 Canadian, and then it went
Yeah.
down to $1.80. Now it's 2.80. So consider how much platinum and palladium have gone up. I mean, this stock hasn't done very well. So, if someone had told you, it's gone up, the last few months it's gone from 180 to 280, but in the bigger scheme of things, it's gone nowhere. So, what has the issue been with Bravo Mining? Has it just been neglect? People ignore it 'cause it's a small cap, or have they had, production problems, or it's not even a producing mine yet? It's just, a project on the drawing board, so it's subject to sentiment swings. So why is this stock, it seems like an opportunity if what you're saying is true. Why has this stock not done better the last few years?
Yeah. So if you look at any platinum palladium stock, I don't care if it's a recycler, a miner, or a developer, they'll have kind of a similar graph. And the reason being that what I mentioned before. So before I mentioned that the average miner has a cost of anywhere between $1,000 per ounce to $1,200 per ounce. So the market has gone from losing millions, hundreds of millions every year to losing a few million every year. So
yeah, go ahead. Hey, Alberto, I love that. Yeah, all right, go on. It's less bad. I got to keep going. Go ahead.
Yeah. So I mean, that is pretty much it. Like the industry has gone from dead to critical condition. So there isn't much optimism to that extent. The market needs to see much higher metal prices in order to be interested in buying anything at all. A good example would be gold prices. So gold prices went down 50% between 2011 and 2016, and it took the market almost 8 years to actually recognize any increase in gold prices, because some miners were losing money, others were making money, but the market didn't care. Like the market only cares when there's a massive move in the underlying commodity, and that is what we're all waiting for.
So that sounds like it's a real opportunity. I mean, you probably we all joke on Twitter about, in FinTwit, everyone focused on price and no one's looking at value. But what you're describing is, if you do some work, I mean, this could be huge, huge upside in these stocks. All right, Alberto, listen, we can keep talking about metals. I know you gave me 3 or 4 graphs. You've got something up there about copper, about gold, but let's change all that. Maybe there'll be some questions. I'd like you to talk just a little bit, just a few minutes. I want people to ask questions. You've got this other stock. It's got nothing to do with the mining. It's something to do with it's a liquidation play or something. Creditors liquidation play in the UK. So is it a play on bankruptcy or something? What is this thing? You got to talk about that. What is the company? What's the market cap? What do they do? And why is this interesting?
So there's this company called Manolete Partners in the UK. Ticker is MANO. Even though it's a Spanish name, the company has nothing to do with Spain. Just as a fun fact, I was talking to the CEO, and he told me that the reason he came up with his name and with the logo is a bullfighter, was that in 2009, when he built this company, he was trying to think about the bull market, so the statue of the bull in Wall Street, and he was trying to think of what stops a bull, right? So he realized that bullfighters, which for those of you that don't know, they try to kill bulls in a square in Spain, Mexico, Latin American stuff. So he looked up the most famous bullfighter in history, which is Manolete, and that is why he named the company after him. So he was trying to explain to the market with his name, with the name of the company, that it's a company that benefits primarily in bear markets when things are doing badly. And why is that? The reason is that Manolete, what it does is they buy claims on companies that are going into administration, so they're going insolvent. And once the process is over, they get cash. They get a return on their capital. And it's the best company in the UK that does this. They have over a 90% case completion. So in 90% of the cases, not only they recover the money, but they make money on the company that is going insolvent. And this wouldn't interest me very much if it wasn't because in 2020, the UK decided to do something really crazy. They decided to forbid companies from going bankrupt.
What?
Yeah. So the UK government back then, they decided that due to the extraordinary situation with the COVID situation, companies, even if they had to close down shops, factories or whatever, they couldn't file for bankruptcy. And they had these laws for 2 years. And in those 2 years, obviously, companies like Manolete suffered very much because basically their industry was closed down by the government. And that created the situation we're in. So that created an artificial situation where you can buy this industry for pennies on the dollar because the government did a really stupid thing. They said, hey, like if we forbid companies from going bankrupt, no one is going bankrupt, right? So it's kind of like this this thing in the Soviet Union where they imposed happiness by law, right? So if we say that no one can go bankrupt, no one can go bankrupt. In 2022 and 2023, the government made bankruptcies legal again. And since then, Manolete has been recovering. And what's really interesting is that right now, I'm looking at the graph that you posted. Insolvencies and bankruptcies in the UK are at the maximum in the recorded history. So I went all the way back to where the records started in the 1970s, and there hasn't been a single year where more companies have gone bankrupt than in
So hold on.
2023.
So hold on a second. Hold on a second. The fact that bankruptcies are going through the roof, okay, and again, it's in the nest. Alberto supplied the graph. Is that because the economy is really bad, or is this just this is a relaxation of that law where they couldn't go bankrupt? So there's like a whole bunch of pent up, there was, you know what I'm saying? There weren't bankruptcies for a few years. So companies that weren't allowed to go bankrupt now are allowed to go bankrupt, and so it's playing catch up.
Yeah. So on the one hand, there's that companies are particularly very small companies have gone bankrupt. So we can call these zombie companies. There were companies that should have gone bankrupt during COVID. But due to the subsidies that the UK government did and due to the laws that they imposed, they couldn't go bankrupt. So
Yes.
on the one hand, there's that. On the other hand, when you look at the composition of which companies going bankrupt, one thing that will surprise your listeners is that there's a massive amount of construction companies going bankrupt. So you can see that the UK has had somewhat of a housing bubble once more, and that is starting to burst. So you have a combination of these two, which has created a massive tailwind for companies like Manolete to profit from.
Sorry for the interruption. There was a technical difficulty causing a slight break. We will now resume.
Okay, so Alberto, I missed you for about 60 seconds, but let's just cut to the chase here. This is a small market cap, isn't it? What's the market cap of this company, Alberto?
It's around 50 million US dollars.
Okay, and what's what's the upside in this stock? Explain to me why you think at a $50 million market cap there's a lot of upside, whether it's based on the forward PE or some big, explosion in earnings. Like, what's the sexy part of this story? Like, why do you think there's big upside, and how big do you think it go up? You mind anything it's going to go up, double, 50%, 300%? Like, is this looking for a big? Is this like a highly speculative name, or is this less speculative, but pretty steady return you're expecting? So, give us an idea of your return. Which, again, you don't have a perfect crystal ball, but what do you think the upside in this stock is, and why do you think it has upside?
So basically, the company right now has a massive volume in their KPIs. So there's a massive volume of business activity. And once larger companies start going bankrupt, which is where this company actually makes the money, makes the massive margins, I would say that the upside is upwards of 500%, which gives me,
Whoa! Why
yeah,
500%? That's nice to say that, but
yeah.
you must have some conviction. Why is it? You're not buying this for. This is almost like Dilly. This is almost like Bitcoin type returns. Why do you think this could go up 5 times? Like, well, why so much? It's a pretty gutsy prediction.
Because we have never seen such levels of bankruptcies in the UK. And the company basically makes an average of almost 20% margins on on their cases. And once we see a recovery on the average revenue per case, I've made the calculations, I've made the valuations. You can find it on my Substack. It's actually the pinned post. This is my main thesis. I have upwards of 20% of my own net worth into this company.
Oh wow!
Yeah,
Wow.
and I think. I argue that we'll see upwards of 500% return once larger companies start going broke.
And let me ask you, Alberto, this stock, again, this is an opportunity. It's not a complaint. It's an opportunity. I just look at the history of this stock, and it's done. This stick was, it looks like it was 600 pence or something. I'm trying to look at this thing here. Yeah, it was over £5, and now it's down to 88. So why is the market not, is the market too short-sighted? Like, why is the market not more excited about this company? Why does it not look at the way you look at it?
So first of all, 70% of the stock is owned by the top 5 shareholders. So the CEO owns around 15% of the company. He has the vast majority of his net worth invested in Manolete, to the point where he's not able to buy more shares just because of the sheer amount of capital he has invested in the business. The top shareholder, which is a private equity legend in the UK, Jonathan Moulton, he holds 25% of the company, and he has held every single share since the company went public. Sorry. In fact, he has been buying more shares over the years.
Wow.
So he has seen the stock triple, and he sold 0 shares. He bought more, in fact.
Wow.
So on the one hand, you have very little free float. There are not many that amount of shares to buy. I have pitched this idea to hedge fund managers, but just the low market cap and the low average daily volume just makes it impossible for them to buy due to regulatory reasons. Most of these guys are obliged to buy anything that has over 10 million US dollars of average daily volume. So this is way below their weight class.
Wow.
So I would say those are the 2 main reasons. Like those that have the knowledge to actually buy this stock, they cannot buy it because it's just
So
too
yeah,
small.
this sounds like a real Peter Lynch type of idea. I'm just looking at this, Alberto. It says the average daily volume the last few months has been 36,000 shares a day. It's a $5 stock. So if you're just half right or 25% right, what you're saying, I mean, this is really, really interesting for an individual investor. So, Alberto, you say you fully describe your rationale on your Substack. Is that right?
Yeah. Like on my Substack, I have a few reports from the company. Yeah.
That's fabulous. That's fabulous. Wow.
Yeah.
I mean,
In fact, sorry. Go ahead.
no, go ahead. You go ahead.
No, you mentioned Peter Lynch. I believe he has this great quote, and I can't quote him because he actually swears on this quote, which I don't want to do here. But Peter Lynch said something like, "You don't make money when things go from good to best. You make money when things look terrible, they look dead, and they go to pretty bad."
Yeah, no,
So
that's totally right. I worked for Peter for a number of years, and that's totally right. So it's always change at the margin that drives prices. So if you go from really bad to less bad, that's a positive. Heaven forbid if it gets good, then you really go up a lot. But yeah, no, this is really, I love this too, because Alberto, because look, I don't know, I gotta do some work on this. I'm not saying people should buy this, but the way you tell the story, this is a great countercyclical play. I mean, if you're worried about a downturn, and most companies get hurt in a downturn. This is counter-cyclical. This will do well in a downturn. That's a really interesting idea. Really interesting idea. Dilly, I mean, you're used to where you go. I mean, you're used to big returns with Bitcoin and some of the crypto stuff. But listening to Alberto, I'm not sure to promote him. I'm just saying he's got my attention though. Between this liquidation play in the UK and some of the platinum palladium metal plays, I mean, I don't know. We haven't had too many people come in these spaces talk about stocks in such strong terms. Certainly got my attention, Dilly.
Yes, very interesting. I'm still not selling my Bitcoin though.
Alberto, maybe you can convert Dilly from Bitcoin to platinum or palladium or this Mount Elite Partners thing or whatever. I don't know. Wow. Hey, Alberto, it's a market of stocks, and you're obviously very focused on specific things, but And then just in the for what it's worth category, do you have any? I mean, obviously, it sounds like you don't want to go right into buy tech stocks or whatever. But do you have any opinion on the market overall? It's just not something you. It's not something you really focus on.
It's not something I really focus on. I don't think there's a lot of money to be made on the macro stuff. At least with someone at least in my case. I mean, if you're managing billions, I think your universe of opportunities is smaller than mine. Like I can invest anywhere in any asset in any company just because I'm small.
Sure.
But my 2 cents on the subject is that, and this is a boring opinion. I would say that both the most bearish and the most bullish investors are wrong in terms of where Bitcoin and where tech stocks are sitting at. Like, I don't think Bitcoin is worth zero. I don't think Bitcoin is worth 100,000. I think the truth is probably somewhere in between. Um, but but until we don't see a significant bear market in that sector, I don't think people will come to grip with what they're really holding, and what they're really holding is faith. I mean, I don't care about the supply of Bitcoin. Like, if people lose faith in Bitcoin, it will have no bits. So, and in the case of tech stocks, I argue the same. I mean, some people argue that we're in a kind of dot-com bubble 2.0. Like, I would say that is false. I mean, tech stocks nowadays have massive revenue, they have massive profits, unlike in the year 2000, where most technology stocks were making nothing, producing nothing, and they had no profits at all. But when I see companies like Palantir trading at high three-digit P ratio, I can't help but wonder: are these companies too overpriced? I mean, just think about it. Like 500 years ago, had you had the wisdom to invest in the company that was going to discover America, had you invested in them at a P ratio of 500, you would be recovering your investment today. So even if you are investing in the company that is going to change the world, just like the discovery of America changed the world, if you buy it at a price that makes no sense, you're going to make no money.
Right. So 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 you're the price matters. I mean, there's the stock, and then there's the company, and Peter also always used to say, sometimes you can have a bad company. You want to invest in bad companies, but you can have a not so great company, but it's been given away, so the price is right. And equally, you can have a great company, but it's priced for perfection, so it's not a good stock. So they're two very different things.
Yeah, I completely agree.
Yeah. So yeah. Wow. Interesting. Interesting. Um, well, it's a market of stocks. That's certainly the case. Um, so Alberto, by the way, we'll go just for a few more minutes. I know you're pressed on time. If anyone has a question, please raise your hand. Always welcome. Now's your chance. I mean, if you want to know about mining stocks. So Alberto, we didn't go into any depth. We really didn't talk much at all about gold or copper. You did provide kindly a couple of graphs. In particular, I think one was. Let me just take a look here. One was the amount of gold. Hold on, let me just find it. I think one was gold production. Well, first of all, you have copper. Copper discoveries are becoming less common and getting deeper. Yep. And so it's kind of rhymes with the platinum palladium story a little bit. So you've got the whole issue where price of copper also has to go up. And then you've also got a really interesting chart showing gold reserves and gold production. And so, without going too far into the weeds, because I don't think we want to, go all night on this. I gather you're optimistic on the outlook for gold and copper. Maybe it's not as explosive to the upside as your platinum palladium story, but just maybe very briefly high level, like what do you think about the price of gold, the price of copper, and also the opportunities in some of the stocks that are in those industries?
So I would say that copper has been more positive than anyone could have imagined, at least at this point. I mean, copper is almost at an all-time high in terms of nominal prices. And I think that at this point, owning like a high quality name, if you're very liquid and have a very large account, owning someone like Freeport makes sense. But at this point, I would be very careful because copper is very sensitive to the economic cycle. And right now, I am not invested in copper very much. Generation Mining has a very significant amount of copper in their deposit, so that's enough exposure for me. Um, but yeah, I mean, in copper, I would say that the thesis has run too hot already. In terms of gold, you could argue the same thing in terms of pricing, but no one is discovering gold deposits, as you can see in the graph that George shared. Um, the annual gold production for the whole world is 100 million ounces, just for so everyone is on the same page. And the world hasn't discovered 100 million ounces since 2008. So we have been almost 20 years without replacing the amount of gold that we are producing. By some accounts, the world has around 15 years to 20 years left of gold mining at these levels, at these price levels. So gold needs to increase very significantly for production to change. But the mining industry cannot increase production in the short term. So even at these levels, of gold prices. I mean, we're at all-time highs, both on real terms and nominal terms. Even at these prices, the gold industry cannot increase gold production in any meaningful amount. So we need to see a lot more discoveries and a lot more M&A for the gold industry to actually survive. So I would say gold, it has definitely more downside protection and more upside than copper does at this point. Particularly if you see the demand side, in which you see investors piling up into physical gold. People who like jewels, they're buying gold, and central banks, most importantly, they're buying gold at record pace. So I would say that owning physical gold makes a lot of sense. Probably the best way to get leverage to gold would be holding a very high quality developer. So someone like Novo Gold, they own one of the largest and high grade deposits worldwide. They're based in the US and they have a $5 billion market cap, if I'm not mistaken. It's definitely out there in the billions. Anyone can pretty much buy stock there. It's, I think, the best way to actually get gold leverage to gold prices. Because if you follow the reasoning after seeing this graph, gold miners are going to have to spend millions, if not billions, into replacing the gold reserves that they are depleting every single day that they produce gold. So all this free cash flow that investors assume gold mining companies are going to put into dividends or share buybacks, that isn't going into share buybacks and dividends. It's going to go into M&A and exploration to actually keep the industry alive. because if they don't do that in 20 years, we're going to have no gold industry. So companies want to survive, and management wants to survive, and they want to have a job in 20 years. So chances are that they're going to spend all this free cash flow
Right.
in replenishing their reserves rather than giving investors a handout.
Yeah, so that's great, Alberto. Alberto, is Nova Gold, ticker symbol NG, in the New York Stock Exchange? I see it's jumped up the last couple months, but it's been a horrible stock for so long. Is this a producing company, or is just a guy that owns a resource?
So they own one of the largest gold deposits worldwide, but they don't actually produce anything. Gold developers, like mining developers, produce nothing. They own the deposit, and they're waiting for good times to build a mine.
Right, and so these are the stocks. Just so the chronology of events, so people in the room can understand this. I remember from my work on mining stocks, like usually people go for the producing companies first because the other ones are making money. Because all right, they don't have as much leverage, but they're less risky. And then as the price of the resource goes up and up and up, they start going down, going down to the less big miners and maybe some of the developers and so on and so forth. So this one's got a lot of juice in it. And we're at a time in the cycle now where gold prices have gone up enough, and they got up a lot, and the prospects look pretty good for further increases in the gold price. That it may be the time of cycle for a stock like this. I guess put it another way, it's sort of like the difference between buying a stock or buying an option, an out of the money option. And so this one's got a lot of juice in it. So this thing could really, it's got more torque. So if gold prices continue to be firm and go up, this will probably do a lot better than, say, Newmont or Barrick or Agnico Eagle or some of the bigger names, correct?
Yeah, in fact, if you look at the stock price of Barrick Gold, it's gone nowhere, even though gold prices are at $3,000 plus dollars per ounce. And let me go even further. Even if we didn't have these supply deficits in terms of lack of gold discoveries, investors should not expect gold mining companies to deliver significant amount of dividends and share buybacks, even at this gold price. Mining companies have the worst track record in terms of capital allocation and returning capital to shareholders. Just look at the stock price of these companies historically. So I don't think anyone should own like companies that operate mines, simply because they're terrible at timing the cycle. No gold company was buying gold projects when gold was down, and now that gold is at an all-time high, they're actually doing M&A, which makes no sense, because most of the stock prices have gone up significantly. So I don't think anyone should expect gold miners to behave rationally, because they have never behaved rationally.
Right. So Alberto, you probably heard the line about, what's a gold mine? It's a hole in the ground with a liar standing on top of it. I mean, to your point, you look back over many, many years and you look at where the GDX was, just to use that as, the biggest ETF. You look back, I don't have the numbers right in front of me, but the ETF is like the same price that it was, I don't know, 15 years ago when the price of gold was, a third of its current level, something crazy like that. I mean, to your point,
Yeah.
we've just been horrible allocators of capital. So, you could always buy the ETF, the GLD. You could buy physical, you could buy futures. Um, but you don't want to own the bad allocators of capital. But do you think selectively, whether it's NG or it's other ones, there are some gold plays, whether they own the resources, maybe you don't want to own the producers, or one model that's done really well the last few years has been the royalty companies. Now you may say, well, we're at the point, yeah, they've done well because they're not subject to, it's a totally different business model. They're not subject to rising production costs, and they're not subject to, production difficulties, all that kind of crap. But you might be in a point in the cycle now. We'd say, well, you know what, George, those are interesting, but it's kind of yesterday's story because they don't have as much leverage to gold prices as some of these other plays are. So if you were looking overall at the gold sector, would you be inclined to look to more for resource plays, producing companies, royalty companies? Like, where would you look aside from NG?
So the company that I own is called Liberty Gold. They trade in Canada, but their assets are in the US. It's like 100 million USD market cap company, and they own some of the largest gold deposits in the US, which are actually economical. So they're just waiting for a large gold miner to come in and build those mines. These are the kind of companies that you want to own. You want to own companies that have very high quality gold projects with uh, economic demonstrations behind them, which isn't just speculation. Like they have done 500-page long studies in which they demonstrate that the projects are actually economical. Royalty companies have been extraordinary in this sector for the past 35 years or so. But they have run into a brick wall, and that is that since no one is discovering mining projects anymore, there are no royalties to generate into projects because royalties are perpetual debt basically on mining rights, but there are no mining rights being generated because there are no
Oh boy.
discoveries
Oh
being
boy.
made.
Oh
So
boy.
they have run into a brick wall, and now the only way that royalty companies have to grow is to buy each other out. So what you're seeing right now is royalty companies doing M&A and buying other royalty companies because that's the only way they have room to grow. So you have kind of the same issue than with gold mining companies. Probably not to the same extent. Like I would take a royalty company over a mining company any day, just because they actually are smart in terms of capital allocation. But I don't think investors should expect the same kind of returns on royalty companies than they have had for the past 30 years or so.
Got it. Got it. So, it's interesting. We're talking before about you might have the right big picture call. You like platinum, you like gold. You think I'm just making stuff up. You think interest rates are going to go
Yeah.
up, the dollar's going to go down, whatever. But one has to be very careful that one does not express that view the wrong way. You could buy, for instance, you're saying you could buy a crappy company. Again, imagine you thought a few years ago, 10, 15 years ago, gold was going to go up a lot. Okay, good. It's a good prediction. But then someone said to you, okay, so buy Barrick. And you'd be like, what the hell happened here? I made the right call. That's the most frustrating thing. You had the right idea, the right macro idea, but you picked the wrong instrument. It happens to all of us. So I think your advice is extremely well taken. So listen, Alberto, it's very late where you are. This has been fantastic. And for everyone, please go to Alberto. Everyone follow Alberto on X. And also, Alberto has a free Substack. It's just incredible. He does all this work. Again, this is not financial advice. Do keep in mind some of the stocks Alberto mentioned. As an example, the last one, Liberty Gold, I just looked it up. It's a 30-cent stock. It's only got a $150 million market cap. So, if you make money, don't say Alberto made me money. Equally, if you lose money, if Alberto's wrong, we all make mistakes. Don't blame Alberto. Put your big boy pants on. So, but these are fascinating ideas. And then again, everyone should follow Alberto both on Substack and on X. And the other thing, too, we're going to be coming out with a website probably on Wednesday this week. We're having our Stock Pickers Conference. This will not be macro. This will be ideas. Stock Picking Conference on July 30. We've got 15 speakers lined up. Alberto's one of them. This is going to be money-making individual stock ideas, and I'm really pleased and excited about this conference. And Alberto has put his support behind it, and so Alberto is going to be one of the 15 speakers that we have. These are all a lot of names you're familiar with. Some you may not be familiar with, but just hang on a second here. We've got Tom Thornton, who you all know. Hold on a second here. Of course, I can't find it when I want to. Tom Thornton, Zachary Marks, who is a buy side guy, runs money. Robert Mullen, MRA Advisors, who's always been in these spaces. Gordon Johnson of GLJ Research, Tesla Bear, although I don't think he's going to talk about Tesla. Steve Kress, Seeking Alpha, Alpha Picks. Jacob Doft, a big buy-side guy. Melody Wright, who we all know is going to talk about housing, but in particular what names one should buy. And I'm missing all the names here, but in any event, it's in my feed. It's going to be a fantastic conference. It's virtual. There'll be replays available. Also, if you subscribe, you will get access to all the replays of the conference we did 3 weeks ago. Okay, and now I found the whole list. It's been a long day. Renaud Soler, who runs an energy fund out of Europe, buy-side fellow, really good. Tom Chanos, Jim Chanos' brother, who does forensic accounting on shorts. I mentioned Tom Thornton. I mentioned Jacob Doff. Steve Kress, I mentioned Gordon Johnson. I mentioned Robert Mullen, Zachary Marks, Ed Dorsey of the Bear Cave, stock jabber, who's great, got a big following. Calvin Froge, shipping guy. Enrique Abeta, Paradigm Press, really good guy, been around for 30 years, done him a long time. Alberto, Melody Wright, Motorhead, and then Jay Mintzmeyer, who we had the other day on shipping. So there's never been a conference like this. It's going to be individual ideas. It's not macro nonsense. You'll come away, if we got 15 speakers, I expect to come away with 20 or 25 different ideas. These are, either research guys or guys are running money. So there's alignment of interest here. I think it's going to be a fantastic day, and Alberto will be there. So with that, Alberto, I want to thank you in Andorra, and Dilly and I are going to come and find you. I want to go, Alberto, it's like, I don't know how many countries you've been to, but, it's nice to say, oh, I've been to this many countries, this many cities, but I've never talked to somebody who's been to Andorra. So this has really been a pleasure. But more importantly, I've learned a tremendous amount, Alberto. I really want to thank you. Thank you so much.
Thank you so much for inviting me, and it's great to talk to you. And I'll see you at the conference in 1 month.
Yep, fantastic. And Dilly, thank you very much. And
Of course.
we don't have any other spaces this week. It's a quiet week because of July 4th. So maybe we'll do an impromptu one, but it's a quiet week, so we don't have anybody scheduled for this week. So thank you, Dilly. Thank you, Alberto. Good night, everyone.